very soon. But before that, we could tell you how markets have performed over the last few years. But before that, we can also go back to our guest, Mr. Prashant Bansal, who is National Sales Head, Broking and Wealth Management, Testimony Securities. Well, good evening to you, Mr. Bansal. First of all, we would like to ask you, what is fueling the markets? Every day they are touching new highs. What is fueling? What is the right reason there?
Good evening, Sumit. Markets Nifty closed at 9816, and I think we are just 2% away from the 5-figure magical mark on Nifty. But what is driving the markets? I think that is something which is important. Now, when we look at on the technical side, Nifty and Bank Nifty both have been making higher high, higher low patterns. When we look at the derivatives data, it is very clear that the bottom is capped at about 9600 levels, and on the upside there is no cap. But what is it that fundamentally that has been driving the markets? That is one. When we look at the global scenario, almost all global markets, Nasdaq, Dow, CAC, they have all been making new highs, and we are very close to all-time highs on the global indices. So globally, markets are looking good. When we look at on the domestic fronts, monsoon has been very good. So the monsoon has covered almost 90% of the country. So good on the monsoon side. On the GST side, we were expecting some hiccups to come, but I think the GST implementation has been going on well, and market is pricing in the blue sky scenarios in advance. That is why we are seeing that markets are continuously running up. On the other side, when we look at the Indian households, a typical retail investor invests either in gold, real estate, bank fixed deposits or equities. Gold and real estates have not been doing well. Our own internal testimony research says gold and real estate will continue to struggle, and real estate for a larger extent of time. So equities are a better performing asset over the next 2 to 3 years. So that's why we are seeing this rally, and I think the rally is going to last a little longer.
So let's talk about how the markets have performed and how are they doing. When we talk about the jump in market, how are they doing? So let's look at the market. It's a widespread wealth creation. Since Jan 1, 2017, the market has been very good since the beginning of the year. Sensex is up 19%. We can say that it's up 19%. Mid-cap index is up 24%, while small-cap index has given the maximum returns. It's up 31%. So clearly, markets' wealth is broad-based. It's not limited to one sector, one stocks. It is broad-based, and that's what's causing happiness for our investors. That's why they're investing more and more money into the market. So that's why markets look back, widespread wealth creation. So wealth has been created or spread across the markets. It's since January 1, 2027, Sensex is up 19%, mid-cap 24%, and small-cap 31%. Many factors are working in favor of Indian economy. The demonetization effect earlier, there was, being said that there could be some negative impact of demonetization or note ban. That did not happen. Later on, monsoon is on target. One big reform, GST has been implemented already. Moving on that, banking on that, markets are up. Sensex is up 19%, mid cap is at 24%, and small cap is up 31%. So market rally is broad based. From the last many days, the markets are touching new high. Today, Nifty jumped and touched 9800 and remained above 9800 once again. That's what has happened to the market, and that's what markets are known for. And Indian markets are, we can say that, giving the best returns in the whole world. One of the best markets that are performing like this. And that's why more and more FDI comes to India, and that further boosts the markets. And we go to the next slide to see what is contributing to the overall market. Let's talk about what percentage of stocks that is in Sensex rally. 21% is one stock, ITC. 19% is HDFC, 15% Reliance, 9% Maruti, and 9% ICICI Bank. So top 5 counters are giving very good returns when it comes to markets. 21% ITC has jumped, 19% HDFC, 15% Reliance, 9% Maruti, and 9% ICICI Bank. So they are top, we can say that, blue chips, and a jump in blue chips has contributed to a jump in, we can say that, overall Sensex and overall market. I will go back to my guest, Mr. Prashant, once again. I would like to ask you, Mr. Prashant, what should an investor do if I have missed the bus and I have not invested in markets? What should I do? How should I make money once again?
I think, Sumit, for a retail investor, it is very important that he diversifies his portfolio. Currently, our pick would be that for a retail investor, he should invest in large cap mutual funds, which are likely to deliver good returns over a period of next 2 to 3 years. It's important for them to do their asset allocation, but our preference is large cap. So somebody who has missed the bus, my recommendation is don't be afraid of the markets. Go ahead, consult your financial advisor and invest in large cap mutual funds. Those who are willing to take a gamble, who are willing to bet on the market, it's important they go back to their financial advisor and look at some good stocks. Some of them you have already named. Our favorite picks continues to be large cap banking stocks on the private sector side, FMCG stocks and automobile. If we concentrate and make a portfolio on these three sectors, the portfolio will give good returns along with some metal companies.
And Mr. Bansal, it's a hypothetical question. Nifty is already touching 10,000 mark. When will Sensex touch 35,000 mark or 40,000 mark? And when will Nifty, we can say that, cross 11,000?
Sumit, it's like crystal gazing. Very tough to answer, when will the levels be touched. But just to give you a Destiny own research estimates, last year sometimes in December, January, we had come out with the Nifty target of 10,500 by sometimes of February of 2018. So I think we will stick to our target of 10,500 on Nifty by middle of next year. So that's one. And in terms of 11,000, I think when the markets are rallying and the momentum is on, it's a matter of time, and these numbers are only very psychological in nature.
And will it be right to say that India is the, we can say that ray of hope in a world where there's overall gloom and tensions, geopolitical tensions? And what is the basic reason behind this kind of ray of hope, and will it continue from here on?
Our estimate is that yes, we should see the indexes moving up, and I would probably beg to differ. India is probably not the only ray of hope, but if you were to see the global indices, Nasdaq, Dow Jones, almost all of them have been making new highs, or they are close to their all-time highs. So we expect that even the Dow will continue to surge, Nasdaq will continue to surge, and other emerging markets, other developed markets will also continue to surge. So there is a global liquidity rally which is fueling the growth of the indices. We expect it to continue for some more time, and India is definitely one of the brightest spots on the horizon.
Alright, Mr. Bansal, thanks for talking to us, and here our market expert was telling us why Indian markets are booming and why is there so kind of, we can say, this optimism.